Hi, welcome to our Ashworth Wealth Weekly Market Update. My name is Scott Thomas. Glad to be with you this morning. I wanted to share a couple numbers real quickly. Some numbers I came across this morning. I just want to briefly hit on these. The numbers I wanted to share with you this morning have to do with the S&P 500 and how the S&P 500 is doing today relative to how it has done over the last couple of years. For those of you that came to our education event earlier this year, we spent a lot of time on this, and we really dissected the S&P 500, how it did in 2022, which was a pretty down year for the S&P 500. And we talked about the Magnificent Seven and how they drug the market down. Also, we talked about 2023 and how well the S&P did, and relatively speaking, how well those Magnificent Seven did. Just as a reminder, those Magnificent Seven, the seven biggest stocks in the S&P 500, Microsoft, Tesla, Nvidia, Alphabet, Apple, Meta, and Amazon. Those companies in 2023 did very, very well. If you look at the S&P 500 as a whole, the S&P was up pretty big last year. But if you take those seven companies out and look at the other 493 that make up the S&P 500, those 493 were almost flat last year. They were actually underwater until about November and December of last year, and they finally made it to positive territory, but they were basically flat. Most of the growth, I've heard as high as 85 to 90% of the growth in the S&P 500 last year were those seven companies. So I wanted to kind of talk about that this year and where those companies are, and then looking at fourth quarter earnings in the S&P 500. I wanted to share a graph with you real quick, and then I want to kind of get back to this. So this graph, what it shows is it shows how the sectors are recovering from the 2022 recession when the S&P 500 was down. What this shows is the purple is fourth quarter earnings per share. The blue is second quarter of 2024 earnings per share. And then the gray bar is the height that the earnings per share were for each sector from 2021 to first quarter of 2024. Even though most sectors, all but one, are still below their all-time highs, or at least the all-time highs from 21 to first quarter of 24, most of them are in much better shape now than they have been over the last couple of years. I want to kind of show you, or kind of read here for just a sec. This past earnings season, the S&P 500 minus the Magnificent Seven saw positive earnings per share growth for the first time in 5 quarters. That is a very good sign. With 8 of the 11 sectors seeing gains. But the outlook for earnings growth is about more than just recovery. If the economy sticks a soft landing, which we're in the process of a soft landing right now, it should make for a supportive environment for many more than just the 7 companies. In other words, with the economy and the way it's going right now and having broad growth across different sectors, we don't think it's going to be, or all the growth is going to be just in those 7 companies. It's going to be much more broadly diversified across the board in the S&P 500, which is a very good sign. So we were going to continue to watch these earnings per share and the projections coming out with earnings over the next month or so. Okay, just a couple other numbers just to wrap up today. This week is a big week with the Fed. We've talked about this before. The Fed is actually meeting 17th and 18th, so Tuesday and Wednesday. We don't expect anything until Wednesday afternoon when the Fed should announce what they're going to do with interest rates. The market is basically built in a 25 basis point cut to interest rates. There's a chance it could be bigger. There are some politicians I've heard this last week that are really pushing or pleading for a bigger reduction in interest rates. We don't know. We don't know what's going to happen. I'm guessing it's going to be a 25 basis point cut, but it will be the first cut we've had, I believe, in 4 years. So that is a big deal. Another thing that we watch, and this is something that you see on the news or on billboards going up and down the freeway that is an indicator of where rates are, it's mortgage rates. I looked this morning, and obviously it depends on the area you're in and your credit and those kinds of things, but the average mortgage rate just went below 6% for the first time since 2023. So that's another good sign. It'll be interesting to see with interest rate, hopefully an interest rate cut tomorrow, what happens with mortgage rates here over the next couple of weeks. So again, we're grateful that you join us for these. If there's any questions that you have, if there's something you would like us to cover, please let us know. We've had some very good feedback over the last month or two. We've had some questions. If there is something you'd like us to cover, please let us know. And again, we're grateful that you join us each week. Talk to you later. Thank you.